Hi, this is Mohan Kumar from Brainy Bulls, and I welcome you to another episode of Nifty chart analysis using the Triple Threat Intraday Strategy. And in this video, let's look at the Nifty chart for May 8th, 2023, and see what kind of entry and exit signals the strategy has given. Let's get into the charts. So this is the two-view chart on the TradingView platform. We have the Nifty spot on the left, Nifty futures chart on the right, and both these charts are set to a 3-minute time frame. So before I bring the three custom indicators on, which I call the triple threat, let's look at the chart, okay, the naked chart, and see what kind of price action it has shown for today. So you could see it was a gap up open, right? The previous day closing was around 18,068 and it opened around 18,128, right? So it was a decent gap up, and post the gap up the price actually moved higher. It was kind of a parabolic move, and there was a kind of a small dip and then it moved higher. It was actually showing higher highs, right? And it's a trending day, and you could say towards the end of the day it consolidated a bit and then price actually corrected, and during the last 20 minutes or so the price actually again moved quite sharp, right? So it was a nice trending day post the gap up, and it's kind of a very rare scenario because post the gap up usually the price tends to consolidate and move in a range bound. But 2 out of 10 times, on a gap open days, the price may move in favor of the gap up, and it's going to be in a trending fashion, just like you see today, right? So let's actually apply the indicators and see what kind of entry and exit signals the indicators would have given us. Okay, so I'm going to bring on the three indicators. The first indicator is the locations, right? And then the second indicator is the participants, which are indicated by the three dots, the blue, black, and green. And then the third indicator is the trend meter, which actually shows us the strength of the trend, right? So with these three indicators on, now the same chart, now it actually makes a lot of sense, right? The the price actually opened right above the central pivot range, as you could see on the spot chart. On the futures chart, it was a kind of a bullish bar, right? It just opened slightly below the central pivot range, as you could see here, and it swiftly moved above the CPR. So this is a very bullish pattern, but we do not get into trades for the first 30 to 45 minutes. What we simply do is observe the price action, right? We do not enter into any trade for the first 30 to 45 minutes, that is up to 9:45. As you could see, the price swiftly moved higher. It's a parabolic move, and it actually moved towards the previous day high, right? As you could see, and it actually dipped, retraced back to the green moving average. Do we enter into a trade right here? No, because you have an immediate resistance. The price may actually see some resistance right here at the previous day high, and besides, the trend meter is into the red zone, so we do not get into a trade at this point in time, right? So we just wait and see the further price action. As you could see, the price has shown a breakout of the previous day high. Now this is extremely bullish behavior. So the when the price moved above the previous day high, you could see the price actually halted for a bit, and there's a beautiful hammer with a participation on both these charts. Now the trend meter actually clearly indicated that the price is moving lower. I mean, the trend is actually weakened, right? But we do not get into a trade, right, a short trade, because it was a major allocation which has been broken out the previous day high. The price may see a strong support at this region, and that exactly what happened. As you could see, the price saw a strong support at the previous day high, right? After post the breakout, it retraced back and it's seeing a strong support. And look at the trend meter, it actually moved to the midway, right? So this is a very good signal that the price is now going to move again to the upside, right? And look at the price action, it moved, and there is a beautiful bullish bar, right, that we can actually put our money on. So the high of this candle is going to be our entry. The low of this candle is going to be our stop loss, and we are going to hold our trade as long as the price is going to be above the green moving average, and the trend meter is going to get into the red zone. Okay. So this is exactly the place where we would try to take our profits, right? And because there is a location which is the daily resistance, and the trend meter is into the red zone, and you could see a lot of participation with a reversal hammer, right? A reversal pin candle. So it's a nice move to the upside, a beautiful move to the upside, where you could have actually captured this entire move, and it's a good trade. Okay, and you could see it was like a trending day, right? Yeah, and it's making new higher highs. Do we get into a short trade here? No, because we still have the moving averages raising higher, right? And there could be a strong support. Either of these three moving averages could act as a strong support. We have the green moving average, right? We have the blue moving average, right? And we also have the black moving average. So the price is way above all these three moving averages. It could actually find a support at any of these. But as you could see that the price actually got a support at the green moving average. It tried to move higher. It moved above the daily resistance, as you could see, and it kept moving higher, right? So it was kind of trending the entire day. And as you could see at this point, right, where the price was not able to move any further higher, a lot of participation has come in, right? You could see, a lot of black dots, the blue dots here, and the price swiftly moved into the blue moving average for the first time in the entire day's move, right? The price actually hasn't tested the blue moving average until 145, but the price moved into the blue moving average, and swiftly moved right above. And then actually the price saw a strong resistance, which is actually shown by the participation right here. Okay, and this small pin candle, okay, two rejection candles right here and a rejection candle right here. So I'm going to remove a lot of these diagrams here so you could clearly see the candles that I'm talking about, which now signals that the price is seeing some kind of resistance at the top. After a strong move from the bottom since open, the price is seeing a sort of consolidation at this area. And as you could see, a lot of participation has come in here, right? And then this pin candle right here, and this two pin candles we have right now. This is one place where you could actually put your money into. This is going to be your stop loss, and this is going to be an entry, and you're going to stick to the trade as long as the trend is going to get to the green zone. So that exactly what happened. The price actually tested the blue moving average. So the blue moving average has been cleared. The tact has been already made. So the price will move further beyond the below the moving average, the blue moving average, and the black moving average could be the next point of support. So that exactly happened. It swiftly moved into the black moving average, and this beautiful move. And look at the trend meter; it is into the green zone. This exactly is where you could have taken your profits. Again, beautiful move to the downside, and as predicted by the indicators, the price action, the candle patterns, you would have actually easily taken your chances with this particular trade, because the price moving any further higher, the probability is slightly lower compared to the probability of the price moving lower, right? Because if the price hasn't dipped into the blue moving average, right, and if the price has been swiftly moving higher, it's a trending day, we wouldn't have taken a short trade. See, we did not take a short trade here, we did not take the short trade here, we did not take the short trade here, but rather we decided to take the short trade because this move did not work. After the dip into the blue moving average, it moved higher, but it could not move higher because there's a lot of participation, and you could see the rejection candles clearly. And this exactly is where you have taken your chances. So this pin candle is your bet, right? So it's a couple of trades, small trades today, but still it was decent enough considering the entire day was trending. We were not able to see bigger moves as we normally see, but these two decent trades should have given you good amount of profits. So as you could see, we trade based on facts. We do not guess. We do not anticipate. We always try to have a very small stop loss. That is stop loss limited to one candle, right? And then we actually trade based on specified target. So if you like what you're seeing, right, and please do like this video and subscribe to my channel to get timely notification about any videos that I post. There is also a beautiful course which I've crafted. It's called the Triple Threat Intraday Strategy course. If you would like to get to know more about this, please do send a message to my WhatsApp or email ID. And until I get back to you another episode, it's bye from me, and thank you for your time. Take care of your loved ones. Bye bye.